In this episode, we will have a closer look at what is in store for ASEAN's biggest economy for the year ahead, and that is, of course, we are talking about Indonesia. The Indonesian economy has been boosted by a strong post-COVID recovery in consumption, as well as a sharp uptick in commodity exports. For example, the latest gross domestic product print showed that the economy grew 5.72% year-on-year in the third quarter of last year, rebounding strongly from 3.51% growth just a year earlier. Of course, the past may not be a perfect guide to the future, but looking at the uptick in some of the key growth components in the country, it should still give us a sense of how strong the growth momentum will be as we enter 2023. Looking at domestic consumption, for example, which contributes more than 50% of the country's GDP, it has accelerated in line with increasing community mobility, which now has exceeded the pre-pandemic levels. Improvement in mobility boosted consumer confidence, which in turn supports consumption, especially in the services-related sector. Moreover, continued improvement in the labor market, accompanied by rising real income as inflation is expected to normalize further, would translate to a better consumption outlook. In addition, as Indonesia will hold a historic 3 national elections in early 2024 from presidential, parliamentary and regional, election-related spending is expected to be more substantial than previous cycle and is anticipated to support consumption further, especially in the second half of this year. As such, given that consumption makes up a considerable portion of Indonesia's economy, such signals portend well for the growth momentum as we start 2023 amid the less forgiving external dynamics. There are several macro risk factors that we need to pay attention to in relation to Indonesia's growth outlook. Downside risk includes a decline in key commodity export prices and a higher interest rates environment, which could slow investment and export growth momentum. Nonetheless, China's reopening would pose as a positive catalyst for the Indonesian economy, especially in its potential for higher economic integration and potentially the return of Chinese tourists to the country. On the policy front, more controlled core inflation should give Bank Indonesia the space to start contemplating a pause in its rate hike cycle. However, the fact that headline inflation remains above central bank's target of 2 to 4% suggests that the possibility of a 25 basis rate hike in the first half of the year cannot be ruled out, while the sportive balance of payment dynamics is expected to limit the need for a more aggressive hike. Overall, we expect the Indonesian economy to grow by 4.8% this year. While it is lower than the 5% that we are likely to see in 2022 due to global factors, however, we do not see a deep slump developing.